Her topic is cryptocurrencies, Bitcoin, and beyond. Maureen is the Robert Purcell Professor of Finance at Cornell's Johnson School, has a PhD from Northwestern and 3 honorary degrees. Her research focuses on market microstructure, and her articles and books have been cited over 20,000 times, a few thousand each. Professor O'Hara has served as president of the American Finance Association and 4 other major economics and finance associations globally. She was the executive editor of the Review of Financial Studies, one of the top 3 journals in finance. She's highly involved in both government and business, as well as academia, consults for many companies, and currently serves on the board of TIAA. She watches your money, so be nice to her. She spent more than a decade on the board of directors of Investment Technology Group, a global agency brokerage firm, most recently as chairman. She was a member of the so-called Flash Crash Committee that some maybe remember, the Global Advisory Board of the Securities Exchange Board of India, and the Advisory Board of the Office of Financial Research at the U.S. Treasury. Most recently, she served on the SEC's Equity Market Structure Advisory Board. She's a great teacher and speaker. I'm sure you will enjoy and learn from today's presentation. We will hold questions until the end so that make sure we get through the material. You can enter questions in the chat or save them until the right time. So virtually, please help me welcome Maureen O'Hara. Maureen, over to you.
Thank you, Joe. Thank you very much for the warm welcome. And thanks everyone for the invitation to talk to you today. This has certainly been a hot area, and one that many of you out there may well be very conversant with, and others of you are, live in fear of your grandchildren and children who, look at you with withering glazes because you don't own any Bitcoin yet. So today, what we're going to try and do is, I thought I'd do 3 things. I would try and just set out Bitcoin and how it works in the very beginning for those of you who are kind of, shall we say, newbies in this area. And then I want to talk a little bit about some of the newer developments, the stable coins and DeFi, which is what's the name for decentralized finance, very briefly. And then we'll talk a little bit about what lies beyond. But this is a huge area, and I don't pretend to be an expert, on all of it by any means. But I am on the advisory board of a couple of fintech companies and also one crypto company that's been doing very well. So hopefully if I can't come up with the answers, I'll at least give you a good try on how to go there. So I wanted to start off and just put this up. I want to stress that there isn't actually a Bitcoin. It's a digital currency. But if there was one, it might look like this. Somebody years ago designed this little, coin image, and it's pretty. So we'll put that up. I also wanted to put this up, which is, hang on a sec, why am I having trouble? There we go. For many people, the cryptocurrencies seem like they came out of nowhere, and, who's actually using any of these things? And, if you feel that way, well, in the US, it is still not, something that is now common to everyone. But I do want to stress that it isn't quite so obscure anymore. As you look around the world, share of respondents who say they used or own cryptocurrencies. As you can see, in many of the developing countries, cryptocurrencies are playing an extremely important role because their own financial systems are so sort of shaky. But more and more, we're seeing crypto entering into the more commonplace of finance. And so it isn't an oddity anymore. And, there still remain a lot of questions, some of which I'll try and answer today as we go through all this. So let's just make sure we're all on the same page, right? And I know, again, some of you are crypto fans, but I'm assuming that some of you are joining us because you always wanted to know what this was. So let's just go through the basics so we can all be on the same page. So it is a trustless, decentralized digital currency and payment system, right? It was designed to solve something called the double spend problem. That is, Joe has, an amount of money, and he writes a check to me and he writes a check to Cynthia using the exact same money. That would be a double spend. And that doesn't happen now because Joe has a bank that stops that from happening. I mean, they'll pay the first one of us who gets the check there. The beauty of the Bitcoin system is that it doesn't require an intermediary. There isn't anybody in there. Instead, it works off a very interesting and complicated system that uses encryption. And what we'll soon see is a consensus mechanism to come up with an agreement on a single ledger in which we agree that Joe has the money he's giving to me, and we agree that he gave it only to me. And now I have the money. And so in a sense, that's what the Bitcoin blockchain is. It was envisioned in 2008. The first transaction took place in January in 2009. And there are now 18.674 million Bitcoins out there. You also hear about the Bitcoin blockchain. That's just a giant ledger that keeps track of every transaction on something called a node. And a node is just a computer that has downloaded the Bitcoin implementation and a copy of the entire Bitcoin blockchain. So when I did some research on Bitcoin a few years ago, I had the great fortune to have as a co-author one of the PhD students in computer science, and he just had his own node. So he had his own copy of the Bitcoin blockchain. So you can do that too, but it requires these days kind of more specialized computer hardware and software. So if you decide to go into mining, it may not be as easy as it used to be. So how's it work? So you've probably heard about miners, right? Miners are actually specialized computer hardware and software. So you could be a miner if you had the computer that had the hardware and software you need to mine, right? And there's actually a huge Bitcoin mining operation over on Seneca Lake. We'll talk a little bit about some of the issues connected with that perhaps later. So what does it mean, right? Miners have three roles. They create new Bitcoins, they validate transactions, and they provide security for the blockchain. That is, they're the ones who take transactions, put them on the blockchain, and then they make sure that the Bitcoins are moving from the one account to another account, and that there isn't a double spend. And so how do they know how to do all this? It's in the original white paper that was put out by someone, a pseudonym of Satoshi Nakamoto. So this white paper set out the system for doing it, and that's what the Bitcoin blockchain does. And so the miners, if we think about what they actually do, people enter into transactions that involve buying something or selling something using Bitcoin. Those transactions are reported or broadcast across all the computers in the Bitcoin network. Miners gather up pending transactions into a block, and then in order to be the miner who gets to put those transactions in the block, they have to solve a computational puzzle. This is all in the original Bitcoin protocol. And the computational puzzle is just finding a long string of numbers. So you don't have to be a genius. You just have to be a computer that's fast enough, and it keeps trying numbers until it gets the right one. It's not, the number itself is one they're going to have to find, but when they find it, everyone agrees they've found the right one. And the reason why, again, goes back to the protocol. We'll make it a little bit clearer in a couple of minutes, but just try and hang on to that. If you are the miner who is the one who solves the puzzle first, then you get to put your block of transactions on the blockchain. And in return, you get a fixed number of newly issued Bitcoins, and that's called the block reward. So right now, the block reward is 6.25 Bitcoins. And as we'll see, Bitcoins are at close to $60,000. So if you get to solve the puzzle, then you get about something worth at the moment around $360,000. And the difficulty of solving the puzzle is changed every 10, basically every 2 weeks, they change the difficulty of solving the puzzle so that new Bitcoins are minted, if you will, or mined, on average every 10 minutes. So every 10 minutes of every day, there is someone on average solving one of these little puzzles and getting paid in Bitcoins. And that's how new Bitcoins get into the system. And I'm sure that's confusing, but let's hope it gets a little bit better as we go along. So we've talked about mining, which is just using computers to solve a mathematical problem. We've talked about transactions, which are broadcast to all the nodes, which are all just the computers connected into the network. If you solve the puzzle first, you get to put your block, which is basically an amount of space on the blockchain. And then we move on to the next. So this is actually a picture of it. I'm not sure that really helps, but it's when someone requests a transaction, it's broadcast to the entire network. Then the network validates the nodes. And this is essentially through trying to solve this puzzle of finding the next, who can be the miner who puts it on and validates. It goes onto the blockchain. And that's how it works. So the key thing is that you get paid in Bitcoins. And what most people have a hard time with is that what backs up a Bitcoin? And the answer is nothing, right? It's not like a US dollar that many decades ago was backed up by gold, but now it's backed up by assets such as treasury bonds and mortgage-backed securities and a little bit of gold. But it has no physical form and it exists only in the network. And its supply is not determined by a central bank, right? But the cool thing about it is the network is decentralized, right? You could be a miner if you wanted to. You could be part of all of this. It's not governed by any government. And that's kind of an interesting issue. So let's talk about some important points. In the white paper that set it all up, Satoshi Nakamoto limited the fact that there will only ever be 21 million Bitcoins issued. And why is that? Because the reward to the miners was much higher when it started off to get people be willing to do this. And now over time, it declines. And it declines by a deterministic formula. It was also in the protocol. So right now, it's down to like 6.25 Bitcoins, and it'll cut in half after that, and half after that, and half after that. It won't actually go away, I think, until like 2040, but by the last 100 years, it'll be a tiny, tiny amount that you get paid. And as we mentioned, blocks are added on average every 10 minutes. Here's more important points. What's the size of a block? Well, it contains transactions, and it could contain a whole lot of tiny little transactions, or it can contain a few very large transactions. So a large transaction would be transfer Bitcoins from here to there, to there, to there, to there, and to him, and to her, and to whatever, right? Where does your transaction go when it's broadcast out there into the nodes? Well, there are different types of nodes. Some are sort of active nodes, and some are just people who have copies of the blockchain and don't do any mining. But if it's an active node, they have something called a mempool. It holds all the transactions that haven't been put onto the blockchain yet. So if you're able to follow that, then we can get into a little bit more of the details, right? Bitcoin is not actually scalable. And this is a huge problem for Bitcoin to be a payments mechanism, because approximately 3-ish transactions per second can ultimately be put on the blockchain. For PayPal, it's more like 200. For Visa, it's more like 1,500 every second. Bitcoin's making changes to try and do that. There was an upgrade to the system over the weekend called Taproot that ultimately aspires to be able to increase the scalability, but it's not there yet. The other thing is, even though I said it was a decentralized network, it really isn't. There are giant mining consortia that now control much of the blockchains. What's that mean? In the beginning, it was like individuals who were busy playing on their computers mining. In fact, one of the interesting problems universities had when this first got set up was graduate students sneaking in at night using university computers to mine Bitcoin. That, ended pretty soon as they caught that. Now, Bitcoin isn't, there are still individuals who mine Bitcoins, but what you see are these giant mining farms, like we have over on Seneca Lake, where you would have just, dozens or even hundreds of computer servers, and they're all just busy spinning away, trying to solve the puzzle, trying to get the Bitcoins, trying to move forward. And you can see why. If you win, right now you're getting paid $360,000 approximately. So, the rewards are there. And what's happened is there are not many, there's actually a handful of giant mining consortia, many of them originally from China, that control much of the blockchain and the mining of Bitcoins. But let's think about sort of some more basics about Bitcoin. It is an ecological nightmare, right? Every computer is trying to solve the same problem. So it's a total waste, right? One computer is going to solve it, so one miner is going to get paid, and all the rest have just sat there spinning away, thousands upon thousands of servers and computers trying to solve a puzzle every 10 minutes. So a single Bitcoin transaction consumes as much electricity as an average US household consumes in about 23 days. So it's tremendously wasteful, and that is because the consensus protocol, that is how we agree on what can be on the blockchain, involves this proof of work. It's this miner who solved the puzzle. And about 70% of all digital currencies use proof of work. They're now moving away. Right? There are other ways to do consensus. One of them, for example, is something called proof of stake. We can talk about that later. There's proof of history, proof of space. There's a bunch, but they haven't really caught on. Proof of stake has Avalanche, which is a cryptocurrency actually that was started by some of our CS computer science faculty here at Cornell, and is now the 12th largest cryptocurrency, uses a different sort of consensus mechanism. So this is a problem. And all I can say is this mining has been good for Iceland. They have all that geothermal, and the financial crisis was hard on Iceland, so maybe we should be happy for them, but it's not so good for the rest of the world. And here's sort of more about that. And those of you who are, becoming more environmentally sensitive, the carbon footprint on an annual basis of Bitcoin mining is approximately the same as that of New Zealand's. Their electrical energy consumption is comparable to that of Chile. And I don't know what e-waste actually is, but whatever it is, it's comparable to that of Luxembourg. So this is a big issue, and it means that the crypto world is going to change. I don't think Bitcoin will, but the rest of the crypto world will, and the rest of the crypto world is getting bigger and bigger. So what do we mean by nodes? Remember I told you that every node has an identical copy of the Bitcoin blockchain. Well, as of Monday last week, when I looked this up, there were 12,874 nodes. So a bunch of them are in the US. A lot of them we don't know where they are. Because remember, this is a decentralized trustless system. And you may not, you don't have to, it's pretty much anonymous. And that's going to be one of the issues that we're going to chat a little bit about if we have time. But the US is certainly big. Germany is big. Switzerland is actually huge, although it's a small country, so surprisingly few nodes. But in the crypto world now, Switzerland has become bigger and bigger. But as you can see, they're spread around the world, but we don't know where almost half of them are. And here's what is a little bit more technical. And if you don't follow this, don't worry about it. All right. But basically, each transaction in the set that makes up of a block goes through a program that gives it an encrypted value known as a hash value. And you can think of a hash value kind of like a fingerprint that you may not know what someone looks like, but if you knew what their fingerprint was, and then, somebody showed up with that fingerprint, you go, okay, yeah, you're the right person. A hash is kind of along those lines. And so, when you say, how do you figure out whether or not someone solved the puzzle or someone, whether this transaction, how do we solve the double spend program? Well, this is all part of it. When you have these two transactions, the hash values get combined. And so when it all goes on the blockchain, it'll have if all these are going onto the blockchain, it will have all the hash values from these along with a timestamp. And then the header then becomes part of a puzzle solved by manipulating a number called the nonce. So I know this is more than most of you want to know, but some of you do know a lot. So I just thought I'd put this in here. Trust me, unless you're going to become a Bitcoin miner or you're going to do research in the computer science department, you aren't going to need this. So, but I wanted to put it up there. But let me show you something a bit more fun. All right. So what is this? Right. So this is actually kind of what these kind of, Bitcoin, instructions look like when they go to the blockchain, right? And, these are essentially telling the blockchain, move from this account to this account, 1,670 Bitcoins. Okay, so that's what a transaction kind of looks like. But what is this transaction and why do I happen to have this one? And what is this? It was actually a Bitcoin payment for murder. Back, there was an early group called Silk Road, which realized early on that the Bitcoin blockchain could be a great place to sell things like drugs and guns and those sorts of things on the infamous dark web. And they finally got tracked down by the FBI, but in the process, this group decided that they could do anything to get people killed. And so this was actually a payment over the blockchain to have someone killed. The reason I put it up there was mostly just to show you what that transaction looked like. But while we're here, kind of a fun story. This is what Bitcoin price. Oh, you're not supposed to be here. Why did that happen? I looked up the Bitcoin price today. Oh, here it is. I thought I'd put it in. I just forgot to take the old one out. Bitcoin's on sale, right? So as long as I have what I had originally, this was where it was last week. It was up at $65,000, but look, it's on sale. Think of it as, a Black Thursday. It's actually been sort of sliding over the last week. It's down to $59,083.50. It trades 24/7, so the price changes over time. You should have bought it last year. Last year it was at 19,147, or even better, back in 2016. So obviously, if you bought it back in 2016, 5 years ago, at $707, you're probably pretty rich and obnoxious right now. An amazing investment. But, be very clear, what goes up, it goes down, and trees don't grow to the sky. So what is the right price for Bitcoin? That is a very tricky thing to come up with, because what underlies it isn't anything. Right? As I think somebody put it really well, Bitcoin is like Tesla without the cars. It is right now a fairly speculative instrument, but it could be more. And Bitcoin itself may never become more than a speculative instrument, but the blockchain and where the blockchain's going is going to become big. So you may shake your head about Bitcoin and you may not be rushing out to buy it at $59,000. But if you only think that that's it, then you'll miss kind of why there is an excitement about it. So let me keep going here. So Bitcoin, remember the first transaction is back in 2009. And a second big thing that happened in this area was the entrance of Ethereum in 2015. So Ethereum is essentially another type of blockchain and cryptocurrency The currency is actually Ether that trades in the Ethereum network, but it's also got blockchain technology. But it can do more than the Bitcoin blockchain can do. In particular, while Ether or Ethereum, ETH, is the second largest cryptocurrency, the excitement about Ethereum is that, as it says here, you can build your own blockchain applications on top of the Ethereum blockchain. So if you want to think about it, think about the internet, right? How all of a sudden everybody figured out like Apple Pay and, Apple Music and a zillion apps that were built on top of, the internet. Well, Ethereum is kind of like that. You can build all kinds of applications on top of the Ethereum network. And that is creating the foundation of what is now called decentralized finance, or DeFi. Almost all of that so far is building on the Ethereum network. Although, again, there are other networks, like, for example, the Avalanche network I mentioned earlier, started by the guys at Cornell, that envisions building on their networks and building applications there. So it's important to kind of understand that all kinds of blockchains have immutability. That is, the blockchain can't be tampered with. And that's true of Bitcoin and true of Ethereum. You can't, go back in and change it. And that's because of the nature of the decentralized network. There's zillions of copies, not zillions, but there's all these copies out there. So you can't really do that. And that's really important. And it's also secure. So far, nobody has broken into these networks, but that isn't true for some of the others. And that is important. We could chat about that later if you want. When you hear about these hacks that you've been going on, most of them are at the exchange level. This is at the blockchain level. And we can talk a little bit about the different levels later if that's helpful. So if you've stayed with me this far, I thought we'd just kind of look at a few of the top digital currencies. This was last week when I downloaded this. So since then, most of these prices are a bit lower. There you see Bitcoin. Last week, this was, I think, last Monday. The price was 65,000. We pointed out already, it's already down to 59, but probably pop back up. Here's what's kind of interesting. Look at this market cap, right? So this is 1 trillion, 243 billion, 213. Hold on. 1,000. Yeah, keep going. So cryptocurrencies are not mere oddities anymore. They're big, and certainly Bitcoin is big. But here's Ethereum. This is Ether. Ether's lower priced. It has, but there are different numbers of Ether and different numbers of Bitcoin. Remember, there's like 18 million Bitcoin and could be lots of Ether. I haven't looked that up. But Ether's market cap is about, what we got there, $562 billion. So these are non-trivial. When you begin to think about how large these things are, there's a reason that your kids are talking about them. And then you have a few others: Binance, Solana, Cardano. Cardano is inexpensive and has been the kind of, coin du jour. You can see XRP. XRP is interesting. This is also known as Ripple. And this was set up to facilitate international payments, which we desperately need help on. Any of you who get wire transfers from Europe are tired of paying that $15 fee. And, that does seem like it'd be unnecessary. And Ripple was originally designed for that purpose. I have a pointer here to Tether, which is called stablecoin. So notice Tether is $1, all right? And it's a cryptocurrency that is designed to have, it's linked to the dollar. There are other stable coins that are linked to some of the cryptocurrencies. So for example, there's a number of stable coins that are linked to Ethereum. And we'll come back in probably a couple of minutes and talk a little bit about stable coins. But I just wanted to give you a feel for how big these markets are. And, when you say, okay, well, I got it. Well, nobody gets it. I mean, there are 7,141 digital currencies right now. Right. So, I mean, these guys don't actually have, there's so little that, these are more like, I think, vanity license plates, but, there's everything out there. There's 7,000 of these. Now, most of them will go away. Do we really need 7,000? No. A lot of these are something called initial coin offerings, which are kind of, they were ways to raise money, and the SEC has taken a dim view of those. So there aren't any more, at least not in the United States. But one of the things that's interesting to me when I look at the digital markets is, some of these digital platforms are going to survive. I think Bitcoin will, Ethereum will. I'm hoping that Avalanche will. But most of these are going to go away. Those of us, the advantage of talking to this group, you all remember back when personal computers came out and there were dozens of PC makers, and Wang is gone, so many of them. I mean, this is not a market, I believe, others may disagree, that will ultimately have thousands of these things, but how many will we have? I don't know. And some of them are just crazy. Right. I didn't put up there the one that Elon Musk keeps pushing, Shiba Inu, which states up front, it has absolutely no purpose. You really sit back and you say, well, really? And there's Dogecoin. Maybe he's pushing Dogecoin. Dogecoin says they have no purpose either. So it's a strange world out there, but it is out there. And, we'll try and sort of think a bit more. So what do you do with these things? So in principle, you can buy things, but this use is kind of limited. You can pay your taxes in El Salvador with Bitcoin. They just announced that it would be legal tender in El Salvador. It hasn't gone well at the moment. They set up sort of an app and it crashed and but hey, good for them. They're being innovative. You can also pay for ransomware to unlock your computer, which is probably the single largest use of Bitcoin at the moment in terms of actual use of payments. You can pay. You'll see sometimes companies will say you can pay with Bitcoin, but if you pay with Bitcoin, like for example, Marriott at one point, I don't know if they still are, but you could pay with your hotel room in Bitcoin, but they didn't actually keep the Bitcoin, right? You could pay for it in Bitcoin, but it was immediately turned into dollars by someone like Coinbase. And then Marriott got the dollars. Marriott does not buy things in Bitcoins. And that's sort of important to understand, because until somebody actually takes it, uses it, and buy something other than crypto with it, this is really not a transactional medium. And there's another reason, which is they have transaction fees. But we'll talk about that in a minute. So the bottom line is right now, the uses are somewhat limited in terms of using it to buy things with. But it can be a store of value. And that's really what I think has been driving the huge increase in these cryptocurrency prices, right? That for people in Turkey, where their financial system is kind of a nightmare, and it may not be easy to get US dollars, although I suspect that most people in Turkey have US dollars that they're hiding away, having Bitcoin, which the government can't get their hands on because it's a decentralized system, can provide you with one way to try and, have assets that keep some sense of value. Is it an alternative investment class? I don't think it's gotten there yet, but there are futures contracts that trade on it. the SEC has been considering ETFs. They have approved, but it has not, to my knowledge, started trading yet, an ETF that's based on the Bitcoin future. But they have disapproved any ETFs based on the actual currencies. So we're still not there. But one of the things that you can do with these digital currencies is they can be used as tokens underlying smart contracts, which is going to be the new world of decentralized finance, or DeFi. And if we have time in a few minutes, maybe we'll circle back and talk a little bit more. But just to give you an idea, what is a smart contract? Well, most of you kind of have a very simple one. If every month you have it so that the bank takes your mortgage payment out of your bank account without you having to say so every month, well, that's kind of a smart contract. It says, okay, every month, take it out on this day. Well, you could well imagine contracts that say things like, this is a bond, and it pays a interest payment every 6 months, and pay this interest payment to this account. And so you could program into the contract all kinds of rules. And if you think about it, if to the extent that works, that gets rid of a lot of this enormous infrastructure that's involved in a lot of the payment system and other areas. So when you think about what is driving the enthusiasm, in my view, it's this thing. It's the potential for this decentralized finance. But we'll keep going and we'll circle back on that a little bit. I mentioned transactions fees, right? I mean, here's part of the problem. Transactions fees can go crazy, right? So you buy a $6 cup of coffee at Starbucks and it's going to cost $60 to put that transaction on the blockchain. I don't think so. In fact, back in a couple of years ago, the North American Bitcoin conference stopped accepting Bitcoin in payment for fees because the transaction fees were so high. It was just crazy. Right now, transaction fees have been very quiet. There have been changes made to the blockchain, something called the Lightning Network. There was an upgrade called SegWit. There's a bunch of things. Will we see another spike? I don't know. I think so. Ethereum has had similar problems. You get spikes because there's more demand than there's space. And when there's more demand than there's space, then you're trying to get a miner to take your transaction as opposed to Joe's transaction. So you attach a little transaction fee, and then Joe attaches one, and the next thing you know, this is what the transaction fees look like. So this is a problem. One area that is booming is ransomware. And I know all of you have heard of this, and it's, these are the issues that I think ultimately will determine, if they can't get this under control, then the whole crypto world is going to be in trouble. And so, when you talk about ransomware, right, here's some numbers from a couple of years ago. In May 2018, the city of Atlanta, all their computers were held hostage. The demand was for 6 Bitcoins. The amazing thing is these ransom demands had been pretty small. That was about 51,000, but Atlanta wouldn't pay, but it cost them 18 million to restore services. Baltimore got hacked the next year. At that point, the attackers wanted 13 Bitcoins. Baltimore refused to pay. It cost them 17 million to get their computers back up. Johannesburg, similarly thing, they didn't pay. But, to me, these issues are becoming more serious. In the sense, a huge issue during COVID has been ransomware attacks on school systems. So far this year, there have been 58 attacks. School systems they're just sitting ducks. They don't have the protection against hacking. And hospitals are even more vulnerable. Over 600 hospitals and clinics have been affected since 2020. Wall Street Journal cites average ransomware payments were 233,000 in third quarter 2020. Total cost in 2020 was 350 million. The average ransom this year is over 300,000. and average remediation costs for school districts or whatever. It's just crazy. And people are paying. I think you all saw the Colonial Pipeline thing. They paid $4.4 billion. These are almost all done in Bitcoin. A chemical distributor in May last year, JBS, the meat packer, they paid 11 million. So, this illicit use of the Bitcoin network is it has got to stop. But I will tell you, there is some good news on the horizon. There was a hack into one of the largest DeFi networks. And essentially, all of the network itself sat down and tried to track who the addresses these things were going to, and then sent out messages saying, don't send anything. And in fact, the hackers put some of it back. So is there a market solution? Maybe. Is the FBI working on it? Yes. Are we there? No. So, as you, and here's what's really galling. When your computer actually gets hacked, you will probably get an email that looks like this with helpful instructions about how you're going to unhack, right? So you need a wallet. Now you got to go buy some Bitcoins. It's, and here's where you can go to get Bitcoins. And I want you to send me 1.7 Bitcoins to this address. At that time, 1.79 Bitcoins were $700 US. So you can tell this was way back in about 2014. But this is crazy, right? I mean, it should stop. I only have a few minutes left, and I wanted to talk to you about something, the beyond, right? So we've talked about Bitcoin. We've talked a little bit about how it works. We've talked about some of the ways you use it or not. I want to talk a little bit about stable coins. And I pointed out Tether earlier. There's Tether. It's the biggest one. It's a type of cryptocurrency that's backed up by either something like the dollar or another cryptocurrency like Ether or Ethereum, right? And this is what's been happening with stable coins, right? So notice this is Tether here. And these are others. Here's this USDC, and this is something called DAI. But the growth of tethers is non-trivial. And what do you do with these? I mean, why do you want a cryptocurrency whose value is pegged to the dollar? Well, mostly you use it to facilitate trading, lending, and borrowing of other digital currencies. So if you decide you want to sell your Bitcoin for Ether, or you want to move across platforms, you may trade into one of the stable coins and then trade into another one. I'll also show you another use for these things. Could they be used for retail payments? This is a big maybe, right? Because some of you may have followed that Facebook wanted to introduce a cryptocurrency that would be used to buy products on Facebook and elsewhere. It was called Libra. It's had a troubled, it hasn't been issued. It's had a troubled progress so far. The most recent is they renamed it Diem. But there's a reason to think about these things, because what backs up these currencies? Could they trigger instability? And are they used for money laundering and other illicit purposes? And so I just wanted to show you a site. When we talk about decentralized finance, now the things you can do out there are not just go buy a Bitcoin. So this is a site, and there's lots of them like this. This is, AAVE. I don't even know how you pronounce it. Maybe it's maybe AVE or something, I'm not sure. But you can borrow and lend, all right? So if you have, this DAI, you can deposit it and earn 2.85% interest, or you can borrow it at 4%. And similar, here's USD, right? And here's the Gemini dollar. This is put out by the Gemini exchange. That's the Winklevoss twins. Those of you who followed all that. 8.27, 11.46. Now, I'm sure you all extremely aware of what interest rates are, but if you have the USD coin, this is what you can get for borrowing and lending on, in the crypto world. But what backs them up? What backs up Tether, right? Well, cash and cash, here's 75% is basically cash and cash equivalents and commercial paper, right? So it isn't just cash, right? in commercial paper is 65%. And this is a big deal, right? Because this is the short-term market. And this is lending market in the United States. Well, what if there's a run on tethers and Tether has to liquidate? Tether's getting big enough that it could cause problems in the market. And if Tether has problems, all the other stable coins are going to have problems. And this has led the Fed, for example, to say that stablecoins are nothing more than prime money market funds in disguise, and they want them regulated. So a very interesting issue. There are 72 billion tethers outstanding. It's owned by somebody called Bitfinance. It operates out of the British Virgin Islands. It's been fined by the New York Attorney General and the CFTC, but it's not actually regulated by anybody. And can this cause instability? Maybe. So I think there's a lot of reasons now why the growth of this is causing concerns. But having said that, let me point out that there are some really promising uses of the blockchain. Digital currency is only one of them. Provenance tracing is really useful. You want to know where your food comes from? Well, it can all be tracked on a blockchain. Should we all stop paying for title insurance? Why shouldn't titles all be on a blockchain? Why do we have to pay lawyers every time, right? Clearing and settlement, prediction markets, corporate document registries, supply chain management, decentralized decision-making. The uses are huge. And it's the first step in what's something called the Internet of Value. Some argue the Internet of Value with blockchains allowing development of new payment systems, supply chains, and the like. And there could be a central bank digital currency. Already a reality in the Bahamas. If you're down there, you can have a sand dollar or a real dollar. So I guess what I would say to you is stay tuned, right? The beyond, it could be huge. And I thought I would just end with this slide and open up for questions. If you really kind of want to know more, here's two possibilities. One is a real fun book called American Kingpin, which is about how they broke the Silk Chain group. And it's about how the early days of blockchain, real fun book. You'll enjoy it. Great novel for Christmas sort of thing. If you want to get into kind of the more heavy duty stuff, DeFi and the Future of Finance just came out this year. It's not easy reading, but you'll know more than anybody else at the next cocktail party if you read this book. So let me open it up for any questions. Joe, I'll turn it back to you. Maybe you want to moderate questions?
Yes, I'm happy to do so. Let me start with one, the colonial pipeline situation that you mentioned.
Yeah.
The government claimed to go in and reverse that, which they lost money because Bitcoin had changed price at the time. I thought this was impossible to do.
It's, Joe, you raised a great point. It was always like, well, you can't do it because there's a private key and a public key and you'd never do it. But actually, it is potentially traceable, right? I mean, it isn't completely traceable, but it is potentially traceable. And that recent hack that I mentioned, where somebody stole actually 600 million, they got a big chunk of that back, because if you can monitor, you can try and see where the money is being transferred. The problem is it then gets transferred to another account, another account, another account. It can be split up in a million different ways, sort of thing. But we're getting better at it, and the FBI is certainly working at it. But it can take time. And when you have an oil pipeline or you have a hospital, you may not have time. And so I do think it'll get better. And I do think we're getting, and now they're going after people. I mean, the FBI, arrested a couple of guys over in Ukraine. But, so there's hope, I think, on the horizon.
So Cindy, I have a question for you. Is everybody's microphone live now?
Anybody who has a question can raise their hand, or they can ping chat, and they can ask questions at this point. Yes. Yeah,
I only see you, me, and Maureen. Does that?
So Joe, can you click on participants and you'll get a list. I only see you and me. So there's attendees. So if you click on attendees,
I got it.
But I haven't, I'm not sure if any of them have, do they, normally you'd see a way to ask a question, but I don't actually see that.
I'm seeing it now. I'm seeing
Okay.
people. Yes. Okay, great. So folks, who has a question?
I think there's one in the chat. Let me see if we can find the chat question.
I have the chat.
All it says is feel free to pose questions. So we didn't get that.
Yeah. So let me see. Bruce Turnbull, I see you. Do you have a question, or Brian Shabbat? I'm just looking down the list. Barbara Finley.
So this is Bruce Turnbull. Can you hear me?
Yep.
Yes.
Yep. Okay. So how do I actually go and buy one Bitcoin?
That's a great question.
Western Union or what?
No, but close. That's a really good question. So in order to, first you have to have a wallet, right? You have to have some place to put the Bitcoin, right? And so what you want to do, like most people go to a place called Coinbase. It's actually registered with the New York State Department of Financial Services. So it's a place where you can go and you can open a wallet. But there are a number of places that offer wallets. So if you did a search on wallet companies, you would find them. And what you would do is you'd open an account and you would transfer some money in there. You'd transfer dollars. And then once you have an account, it's like having a brokerage account. You could buy or sell any of the cryptocurrencies that trade there, and there are lots of them. So, it's kind of a stranger world in the sense of you need a wallet, and then you have to trade on an exchange, right? But it's not like the exchanges we trade equities or that sort of thing. There are crypto exchanges. So most crypto exchanges are outside of the United States and would be very difficult for you to reach from a Coinbase or place like that. But some of the ones that are in the US are the Kraken is in the United States, and Gemini are in the United States. I suspect you can have a wallet at Kraken. But I have a wallet at Coinbase, and and so and unfortunately or fortunately, it's hard to say. New York is actually harder to trade out of than most places. I mean, it was illegal for us up until like 4 or 5 years ago, where everyone else was doing it. But even so, we have lots of rules. But that's what you would do if you wanted to buy something.
Okay, Maureen, I do have a couple in the chat. Let me look here. Are you concerned that the largest geographic users of cryptocurrency are countries with history of money laundering?
You've hit a huge issue, right? I mean, the biggest challenge right now that I see is that this thing does not fit into the regulatory frameworks. And it's because of that China has banned cryptocurrency, trading, mining, you name it, in China. Korea kicked them out. There needs to be a better structure for regulating this. And I think we're getting there. In the United States, it's kind of weird. We do have a structure, for parts of it, right? So in the US, Bitcoin cryptocurrencies are viewed as currencies. And so technically, they fall under the purview of the Commodity Futures Trading Commission, so the CFTC. So there is a little bit of regulation about that, but not much, right? Because almost all the trading actually takes place outside of the United States. And the SEC has definitely stepped up in these, what used to be called, well, still are, initial coin offerings, which were basically, offerings of what the SEC deemed were securities, because you were investing in what was a new crypto or blockchain more venture, and in return you were going to share in the rewards. Well, if I buy something called an ICO and I'm going to share in the rewards, that sure sounds like a security, and that's what the SEC found. And you have to register at the SEC. So nothing gets registered in the United States. At almost all of these crypto enterprises now, not all, but most, are in the Caymans, they're in the Virgin Islands, they're sort of anywhere but here. So that's an issue. And the whole money laundering thing is non-trivial. What may change all this in time is the development of central bank digital currencies. The Fed is considering it. China's already introduced one. Sweden is moving in a very interesting direction. Only 1% of all purchases in Sweden now involve cash, right? And in fact, IKEA in Sweden doesn't even. Oh, I'm sorry.
If you want me to, I will.
Yeah, so from there we could go over to.
Okay.
So anyway, Sweden IKEA in Sweden doesn't even take cash in their stores anymore. They'll give you a free hot dog because they don't want to actually have to take cash to pay for it. So it's going to be a very interesting world.
So Maureen, there are several other questions up on the chat. Which currencies have energy efficient ways of issuing new coins, and how do they do it?
So the easiest way to think about that is to talk about currencies that use proof of stake. So Ethereum is moving to proof of stake. So we talked about mining, which uses this ridiculous, mathematical puzzle and computers. Proof of stake says that everybody who owns this kind of gets a vote on who gets to, or a subset gets a vote on who gets to post the next transactions. And so if you own more of the currency, you get, if you will, more chances of being selected in a lottery to put the transactions on the blockchain, which gets rid of the crazy electricity. Ether is the biggest. You'd have to check exactly which ones. I mean, like Avalanche uses a system that doesn't use proof of mining. I think Cardano does as well. A lot of them, but 70% do use mining. When Ether finally moves, which is supposed to be happening before the end of this year, I believe, that will be a big step. But as you can imagine, it's fundamental to
tax. Maureen?
So I'm sorry, I'm not sure if it's mine.
Whoops.
I'm
Maureen,
back.
Are you
Sorry,
back?
I'm back.
Okay, good.
I think the question had something to do about taxes. Can you repeat
You
it?
have to include it on your tax return. Do you have to pay capital gains?
Yes. That is technically true. And, that if you have an account at like Coinbase, then the US can probably track you down. If you have an account at, Binance, which is, off in the Virgin Islands or someplace, probably not, but it is, you do have to pay taxes on gains for cryptocurrencies.
Yeah. Well, we'll take a couple more from the chat. We probably won't get to all. I will encourage people to send Maureen an email. Maureen, if you're still there, I mean, the internet is fading out. When quantum computers are actually available, will they be able to mine it cheaply and therefore with less energy consumptions?
Yes, but I think the biggest problem with quantum computers is whether or not they can crack the Bitcoin blockchain. Right now, Bitcoin is secure. The big concern is if you had a big enough computer, could you actually crack the code that encodes the Bitcoin blockchain and then go in and change it? And that, that's an issue. because nobody knows exactly how good these quantum computers will be. People will say, no, 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 it'll be okay. But that to me is the bigger issue. And, you know, I think that the security of the blockchain, if that ever gets compromised, then the game's over.
Yep. I think, let's see, there's two final questions. One is what is known about the original white paper author? I believe that I saw his name revealed recently. And then the final question is, how do normal mortals understand the whole ecosystem of currencies, exchanges, and intermediaries? So I'll give you one easy question and one hard one to end, Maureen.
Well, there's a guy who claims he invented it, and there's a trial going on right now because he's suing like everybody, saying it's his, but nobody really believes him. So I think this is unlikely. It's not clear, you know, who Satoshi Nakamoto is. I hope we never find out. It's kind of a fun mystery. How do mortals do it? Well, actually, I think the key is to begin little by little. You know, open a wallet. You know, you'd be amazed. Just, you know, do a little web search. There are lots of websites like Blockchain Info or CoinMarketCap, and you just start reading. And you know, try and begin to get a handle on sort of all of this. It is a lot of fun. You know, and you know, that's not immediately clear how you know, whether that 10 years from now we'll be talking about the Bitcoin bust, but I don't think we'll be talking about the blockchain bust. So, you know, it's important to realize they're not the same thing. And Bitcoin brought us blockchain, but most of the developments that are exciting are on the blockchain. And, you know, we'll just have to see where it takes us.
So, Maureen, thank you very much. Everyone in the audience, please join me in virtually applauding Maureen O'Hara. Thank you all for attending.